Hey everybody, welcome to TradingCap's exclusive analysis. In today's video, we're discussing natural gas, Bitcoin, and touching base on the Nasdaq QQQ. So looking at nat gas, since we've hit this 319 level, we've really sold off of the last three sessions. And the question is, should we be buying this dip? Should we be waiting for lower price action? Or should we be shorting this? Well, full disclosure, we are net short nat gas with members as of this pivot high. Now, we obviously previous videos we have been discussing that there's potentially a major bullish trend setup that's setting up right now in the nat gas commodity, the Widowmaker. And what is that trend? Potentially it's a golden cross of the 50 and 200. Has not occurred yet, so we could see this pattern fail, but nonetheless, if you get a golden cross, the 50 intersecting with this blue 200 in an uptrend, that puts into probabilities a likelier move higher. This is on a technical basis. This is just what the charts are telling us. I've had a lot of fundamental flack. I've had some people questioning whether or not we're actually going to see this technical move play out. But for the time being, nat gas has clearly had an incredible move off of the lows. It was an extremely depressed asset at these areas. Our members were able to trade it long off the 186 level and catch a large share of this move to the upside. Now the question is, can we make money if nat gas is to see this golden cross breakout? There's a couple of things. Nat gas has a tendency to get people bulled up, and then all of a sudden when there's a lot of people on the bullish train, they rip it down lower, and vice versa. It has overshoots on both the downside and the upside measured move. Now, a lot of people are also looking at just simply the inverse head and shoulders that is potentially developing, which would give you a very high degree of upside target if this were to break out. Remember, inverse head and shoulders only are valid once they break the neckline. You can see you had a peekaboo breakout here, which in the near term is failing. You're getting a failed potential bullish pattern here in the near term. And typically when you get a failed bullish pattern, odds are you go much lower than most people think. So there's still a tendency that we could even check back to the daily 200 and maybe even go lower. I'm actually still holding my short position, looking to press this, but I am going to explore entering long trades once I get the true signal. Now, a couple fundamental pieces that we need to really watch out for in nat gas. Basically, on the fundamental side of nat gas, working gas in storage was 2,974 billion cubic feet as of Friday, June 7th, according to the EIA estimates. This represents a net increase of 74 billion cubic feet from the previous week. Stocks were 364 billion cubic feet higher than last year at this time, and 573 billion cubic feet above the 5-year average of 2401. So at 2,974 billion cubic feet, total working gas is above the 5-year historical range. So with that being said, does the fundamentals support higher price? When you read these estimates, being the fact that we're above the 5-year average, it actually does not support higher price. So we just have to keep that in mind. Obviously, the technicals are shaping up one thing, and the fundamentals are telling us another thing. So this is the catch-22, where as a trader and investor, what do you pay attention to? Do you look at the charts? Do you look at the fundamentals? Because they're kind of giving us mixed signals at the moment, which is why this is going to be a very risky trade on really both ends of the coin. Whether you're short, whether you're long, it's still going to be a very risky trade. Now, taking it one step further, let's just identify some support and resistance zone. An interesting level that I'm watching here is if you take a trend line from your all-time high pivot in 2022 there, and you draw it down to this trend line. Take a look at that. I'm a firm believer that nat gas has broken out on the daily out of this long-term downtrend. And the question is, if the bulls can hold this trend line, nat gas is probably going to press higher and try to make a breakout of this inverse head and shoulders. If you lose this trend line, believe it or not, I think that would go lower. I think you'll have some temporary support at the daily 200 here, which we never officially tagged off of this consolidation decline. But I do think that there's a strong chance we can actually come down and test the daily 200 moving average on the charts. The next big level that I'm watching, let me just erase some of these necklines or these trend lines. I'm watching this level very closely. If you take a trend line from your, basically your almost your COVID low pivot here, and you draw it through, connecting through these pivots, connecting through this wick pivot here, this is the area this is the major area I'm looking for nat gas to potentially decline to if this turns out to be a failed bullish breakout. So again, considering the fact that we broke above this major trend line, notice how it was support here, support, support, support. We broke down. Now we've busted through. A lot of times technicals love to retrace back down to a major resistance zone. And considering this was a, a zone that we tapped once, twice, three times, four times, and all the way down here during our little COVID capitulation, that's going to be a big area of opportunity if nat gas loses that downsloping breakout trend line. So watching it very closely. But I still have an upside target on nat gas of basically between 350 to 450 by year end. All right, let's quickly move along to Bitcoin now, BTC USD. So full disclosure, another asset that I am net short. Members are accumulating a crypto Bitcoin position. We do have a short right at pretty much the wick high here of around 71,928. And then we're also accumulating BITI for the equity stock market traders. Now, first things first for Bitcoin, there's a few interesting patterns at play here. One being the fact that we're sitting right on the 50 daily moving average. Okay, if you lose this area, it's not going to be a good sign for Bitcoin. Simultaneously, while we have the 50-day moving average sitting here, you're also sitting right at the low of this impulse green candle. If you lose this impulse green candle, I think Bitcoin's going to fall pretty sharply in the near term. If we simply look at some intraday patterns on Bitcoin, there's a few head and shoulders that have actually triggered on Bitcoin. The closest one that we need to be aware of, and let me just turn off of this little indicator here. The closest one we need to be aware of is this little neckline here. Notice how we have a left shoulder, a head, a right shoulder. This is triggered on an hourly basis, and you're just consolidating right underneath that bear neckline. So considering this pattern has triggered, what is the downside measured move off of this little neckline zone? That gives us a target of roughly 62,000 and change. So just keep that area on watch, because Bitcoin has shown a bit of weakness in the near term. Although, even though you've triggered a bearish hourly formation, one has to consider, what if this is a large inverse head and shoulders pattern that is developing? Remember, inverse head and shoulders are only valid once you break the neckline. Your neckline would be the top of this parallel channel. So until we break the top of this channel, Bitcoin is just stuck in a choppy range, and it's likely going to experience a decline every time it hits the high of this range until it's truly ready to break out to the upside. And the cool thing about this inverse head and shoulders is it gives us a really phenomenal upside target if it does break out. But let's say this pattern fails, then you could easily head right back down to the low of the range. And if this channel fails, then you have a downside target of about 45,000. So right now, Bitcoin actually has a more likelihood of trending lower to the next support zone because it saw a rejection at an attempt of a breakout here. So at the moment, keep your eye on this impulse green candle wide range bar. All right, looking at the QQQ, the Nasdaq has just been a relentless monster. There's a few things that I'm watching. First off, there's a beautiful little parallel channel. Support pivot, resistance pivot. Where's the next resistance pivot? It's coming up into this vicinity right now. The QQQ is looking to press a little bit higher in the near term and potentially tag the upper range of this channel. Again, the last time we tagged the upper range of this channel, look at the decline that we saw. Another 8% decline. And then you had a bounce, and then you had another decline, then a bounce, a little bit of a wave correction that ultimately took you about a 12% decline in a couple, wave corrections here. If we were to experience the same correction, roughly a 12% decline, take a look at that. It takes us right back down to the lower boundary range of the channel. So are we going to go through a very similar process, or is the Nasdaq just going to keep melting up and pressing through the back of semiconductor strength? If we get through this channel on the weekly chart, your next channel of resistance is going to be, let me just adjust this channel. If you draw it from this COVID pivot low to these pivot lows over here, through this pivot high, you can see your next resistance channel will be all the way up at here around closer to 500 on the QQQ. So that's a psychological whole number that a lot of times market participants want to keep pressing the market for. But overall, there's a lot of action that's unfolding here we're entering a bit of a scenario where you could see weakness in the labor market, you could see disinflationary trends setting in, but simultaneously, you're also seeing central banks around the world cutting. Bank of Canada, ECB. And typically when they start to cut, something generally on the horizon for the global economy is brewing. And whether or not it's a recession or a softening in GDPs across the world, time will tell. But historically, whenever central banks start to cut, that definitely means something is lurking on the horizon. What's interesting with the cuts, you're seeing weakness in a lot of these financial sectors.